Live on the virtual trading floor. Bada bing. All right. And I am an associate member of T3 Trading Group, which is a SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I tried a couple of things today, didn't keep any of them. Exited Microsoft entirely. Very rare that I'm flat Microsoft. Even if you go back like 7 years, I've almost never been flat Microsoft. But currently I am, kind of pared down on some stuff even prior to today, so that worked out pretty well. Brutal day on Wall Street. Luckily I had a few stocks hold up really well today, and a couple okay day trades that helped me to pad my P&L. But yeah, pretty ruthless. SPYs here down about 1.5%. Qs are down 2.5%. It's really bad. Russell is down 1%, and worth mentioning a little relative strength out of the Dow. Dow's only down 0.5%. Again, I almost never look at the Dow. Let's look at our technicals and let's review the game plan that we had from this morning. So the game plan from this morning was we recognized yesterday's candle as a doji, and for the Qs and the IWM, well, really for the Qs, it was a doji within its equilibrium zone. For the SPYs, it was just above it, but still beneath this negative Maribozu candlestick. And the IWM actually had a significantly weaker day yesterday. It already had gotten rejected off the 21 EMA into that equilibrium zone, but wasn't necessarily the end of the world, and is definitely still above support. So actually, I'm going to focus on the Nasdaq for the moment specifically because I think it's the cleanest chart of the three right now. It's also the weakest. The question this morning in the morning meeting, I gotta switch my thing. There we go. So here's the Nasdaq chart. The question from this morning's morning meeting, yesterday's candle, is it resting and digesting after 2 strong days to then give continuation and get back above this 395, 396 day from when we broke down on the Fed meeting? Or was it a doji in equilibrium that's creating a lower high versus where we broke down from that could be the start of an actual Nasdaq breakdown and Nasdaq reversal? The confirmation of a Nasdaq reversal, at least on like an intermediate time frame, would be getting below Monday's low. And broadly, I would consider the Nasdaq to be in bearish territory below 377. Right, we had this big support zone that we had discussed in the Nasdaq between 377 and 380. Obviously, things were looking pretty bleak on Monday, but that's when we were super extended. We recognized that appropriately. We game plan to stay very well with our short time frame shorts, but bigger time frame longs, and we still got to close above the support zone. Today, we still have a close above the support zone, but this is a very bleak-looking candle, and it looks like, so far, again, we don't really have confirmation until a new low comes in. Certain stocks did this, but the indices did not. It's looking like yesterday is a lower high for this marketplace, and things are not looking good. Obviously, if we break Monday's low, we would almost definitely be having a day here with the 200-day, and the market has not seen its 200-day. The Nasdaq has not seen its 200-day in quite a long time. So it'll be interesting to see how that trades. I feel like if this low breaks, we're not just going to stop at the 200-day. I feel like we'll probably overshoot that. Next major support is down at 350, really, if we get a close below the 200-day. It is worth noting that the 200-day is still rising, so that means the essence of trend in a long time frame is higher. But broadly, I would say our Nasdaq is technically in neutral territory, but it's neutral territory and it's not looking good, right? Lower high here in the marketplace, very bearish negative Maribozu. I mean, this is a heck of a candle today. This is a wide angled candle, and I thought that if we did kind of get the lower high in the market and we had a weak day, I mentioned to the team that you want to start to consider your shorts if we get confirmation below yesterday's low. I didn't think that we were going to get the follow-through that we got, not to this degree. This was a really, really big down day. So that was basically the game plan coming into today. Was I felt that we could look to be a little bit more aggressive than yesterday. I did mention that I'm broadly more bullish than bearish. Obviously, that's being proven incorrect, and I got to potentially adjust my thought process, especially if we start losing that support. But we know that the market's in neutral territory. Now we have a lower high. We have another negative Maribozu. The Nasdaq looks really bad. SPY's not quite as bad. It's definitely not a good candle. It's definitely also a potential lower high here for the SPYs. But SPYs are kind of more building out, I think, a potential wedge at this point than they are close to like a trend reversal type of situation. So we'll see how that plays out. Obviously, tech is where your real weakness has been. And it's interesting that the IWM actually was relatively strong today. The IWM was holding up great for most of today's trading session. It was green to flat almost all day, and then obviously the sell-off into the last 2 hours, changed that dramatically, so that the Russell closed down almost a percentage point. But the IWM was trying to hold up really well, and it's just interesting because the IWM was relatively weak yesterday, so it definitely had a flip today, where yesterday the Nasdaq was stronger, was able to hold in, and IWM was weaker and sold off, and that flipped. IWM was trying to hold in, and the Nasdaq sold off. So again, big picture game plan that we had for coming into today, though, was to be defensive. Again, this is one of the big themes. I mentioned it in my morning video that I do with TikTok in the mornings. I was just like, guys got to know when to be aggressive and when to be defensive. And the last 3 trading sessions, yesterday was definitely a defensive day. It was a passive day. I did very little trading yesterday. The 2 days before that were days to be aggressive. And today at the open, until we had more clarity, you wanted to be defensive is what I said, but maybe a little bit more aggressive than yesterday. Maybe you could take some chances on things that look like they're setting up and look like they want to break higher or whatever it is. But once the Nasdaq or the SPYs or whichever indice you're looking at or any individual stock like broke yesterday's low, and then you had some more potential confirmation this could be a lower high, then you can't fight that market on the way down, because this turned into it really turned into a bloodbath at that point, and some of these stocks got absolutely demolished. And today was still also a day to focus on companies that were trading independently to the market because they had news. And we had some news names today that some of us were involved in that were fantastic trades. Delta, we had the call out through 41.50 is what we were looking at in this Delta. Cleared it here. Some of you guys were able to capture this move. Nice trade. You may have gotten pushed out, somewhere into the afternoon here, but I mean, Delta's still up 1.5%, and if you consider what the market did, held in pretty well. Other one was UAL. UAL is a secondary to Delta's earnings, plus the stock got an upgrade, plus you had these inside days here as the potential setup. So we talked about UAL in the morning meeting, long through 47.50. 47.50 here in UAL, also, real clean trade. It was a good bit of risk to give to the low of the ignition bar, but anybody who caught it, I think a few of you guys did, really clean trade. We talked about Beyond Meat. Beyond Meat, I think had an article in the Financial Times. I just saw that as a headline through Pat's information in the morning about their very large short float. So like, oh, that's interesting. Taking a look at the stock, $70 is a very clear resistance level. So I had Beyond Meat on the list for today for a breakthrough $70, break through that resistance level based on that high short float. And I didn't get stock in this one. I was really frustrated. I had bid out on the way up. I didn't. It looked like it wanted to go to me. I called out that the first bar was looking good, and then the second bar to me, even before it broke 70, it looked like it wanted to go to me, but I was worried when I saw where the second bar opened. I was like, oh man, I'm not going to want to buy $70 and give it down to 68, 66. So I tried to sneak in with a cheat by bidding in at 69.25, and I was inside bid and never got that bid filled. It's obviously a spready stock, and then this thing just ripped through $70. So I unfortunately did not get any stock for this name for this move because it worked out really well. I know some guys who didn't capture the initial move were trying to buy this bullish pennant here. Unfortunately, that bullish pennant failed. It was a deeper 15-minute correction. And then even when it looked like this low wanted to hold, it created an even deeper low. I think the only way that you actually could have made money in Beyond Meat today is if you were involved in the actual ignition candle when the 70 resistance that I called out from the morning meeting actually broke. Anybody who tried this elsewhere, you probably got stopped out. Only if you had tried it, were using the ignition bar low, maybe cheated because otherwise the risk reward, you're paying up a little bit too much. Could you have gotten stock? Otherwise, it was really very difficult. But I think that a couple people heard me call out that I was trying to bid into the stock and were able to get involved below 70. So for those couple people, great job. Maybe you guys are the reason why I didn't get stock. I'm bidding in, and I'm calling in that I'm bidding in. Maybe some of you guys were smart and just took the offer and made it so I couldn't get filled and made some money on it. But, good follow through to $74 on this thing if you were able to capture it before also having a week close, just because, obviously the market. So if you focused on things that were in play, there was some okay stuff that was out there. Anything that was more market related to the long side, kind of forget it. I was trying off the XBI, which held that $100 a couple days ago. This Labu off 25, and that was a positive trade for me, even though I got stopped out. Just trying it this first time here off 25. I put it in an okay hammer into that support. Got a nice $1.25 bounce on that thing before it rolled over and fell and stopped me out. So tried that one. I took a little bit of a loss. I tried to be an ape. I briefly tried to be an ape in AMC and took a loss, going long off, what was I going long off of? 21, right? I think it was 21. Yeah, 21 was kind of like a support zone here with these tails, and it was, kind of getting extended into it. And I thought that the market looked like it wanted to bounce a little bit at that time, so I tried briefly to be long AMC, lost a little bit of money on that. Not the end of the world. The stock's worth $4. And honestly, this is one of the things that scares me most about this market. If I'm still trying to decide, these growth stocks, are they oversold? Should I be considered buying them? Well, when I look at an AMC or a GameStop, I've been saying this I've been saying this for months. I've been saying this for the entire up move that AMC had. The stock is worth $4. So I still actually get nervous about the health of the market as a whole when I see that AMC is able to be trading even now with this weakness, down 9% today, trading it above 20. I did really, really well being short this AMC back off 60 with a profit target of 20. Actually got out of that a little ahead of my profit target and haven't really been involved in it since. Maybe I should have been more aggressive on that $20 profit target. I thought being short from 60 and catch and move to 20 is a good idea, but things were at 4, and it looks like it looks terrible. This chart in AMC looks absolutely awful, and again, that's what scares me. GameStop, maybe worth $40-50. It's just trading at 122, 123. Also, chart does not look good. If this GameStop loses this 120, 121, watch out. Watch out. This could be violent. So that actually still makes me a little bit nervous when I look at these stocks and I consider some other ones that I might have an interest in. When I look at like a DKNG at $24, I think it's a very real company. I have some interest. I look at a Peloton at $32. I think it's a real company. I think that there's a buyout here maybe at some point from somebody. At these types of cheap prices. I have an interest in some of these companies that I do think could eventually grow into their valuation, but then I still get nervous when I look at an AMC or a GameStop. I was really happy by the price action in Bed Bath & Beyond today, considering what AMC was doing. Bed Bath & Beyond has also been one of these ape Wall Street bets stocks, but we've had a bullish thesis on this thing while having a bearish thesis on AMC, kind of based on more fundamental things. We've got a buyback going on as opposed to AMC. AMC CEO, he tries to pretend like he's one of the apes because he wants everybody to buy his stock. But then what is he doing? He's doing secondary offerings when the stock has a rip to create more supply. That hurts those people who are investors or traders who are involved in it. Bed Bath & Beyond does the exact opposite. They have an accelerated buyback program, but yet the stock trades oftentimes with AMC and GameStop. So a lot of the times when I'm looking at AMC down 9%, I'm looking at Bed Bath & Beyond down 5 to 15%, kind of depending on the day and the strength to those names. So the fact that this Bed Bath & Beyond was able to be up, closed up 10% on the day, I don't love the close. I wanted a little bit of a better close, like $15.50 or better. The $15.50 to $16 zone is a major resistance zone, so I would have loved to close at that zone. But again, if you consider the sell-off into the close, the fact that they sold this thing off a little bit more, not the end of the world. But I really want to see this Bed Bath & Beyond start to actually clear that $15.50 to $16 resistance, and then maybe we can get the next leg of a short squeeze, because this thing is still it's still really extended. Sorry, not extended. It's still really highly shorted. So this Bed Bath & Beyond saved my day today, honestly, because I've had a decent sized position in it. Was able to capture that move. I traded it really well today. So that was a decent one for me. This WeWork is still holding up really well. It's still kind of continuing its grind, but this $10 spot in WeWork may act as really big resistance because it was a SPAC. So we'll see how that plays out. But yeah, I mean that's basically it. The market, we were looking to see, do we break yesterday's high or do we break yesterday's low? If we broke yesterday's high, it could be confirmation that yesterday was a rest day. We're continuing the trend. If we broke yesterday's low, it's potentially confirmation that the market's giving us a lower high. Could be bearish. Now the next thing we have to see is, does this potential lower high for the SPYs and especially the Qs actually lead to a lower low? We've been seeing huge ranges recently. And even with that, we were able to find some good trades, some good names in play. There was one other thing I wanted to bring up that I have some interest in and a thought process on, is this TLT. TLT was green today. That means that interest rates were lower. We know that the TLT is a very crowded institutional short right now. So I actually had a thought process earlier in the day, before the market got as bad as it finally did, of what happens if this market actually breaks. It was right when the SPYs and Qs were breaking yesterday's low. I kind of had this thought process in my head of what if this market actually starts to break down a little bit, which then creates a fear trade, a flight to safety trade, where people start buying this TLT, which then makes it more difficult for interest rates to go up organically, kind of based on the market, which then could squeeze the fact that this thing is very heavily shorted right now. Treasuries are very heavily shorted because everyone's looking for these higher interest rates. What kind of squeeze could that actually create? What's the result of that? So interesting, right? Just kind of interesting to play with the thought process of what happens if interest rates actually go down, because we've seen that happen before too, right? Where we've seen times where, we had this big squeeze right even in here, right? End of November into the beginning of December, when the TLT got all the way up to 155. Now the Fed and the markets are thinking that there's going to be even more faster interest rate hikes than they were thinking at the end of November, early December. But there was still, that was an institutional squeeze because people were caught wrong-footed because they're expecting this thing to go down and interest rates to move higher, and the market bought it up. So it'll be interesting dynamically to see if that actually happens. So that's it. That is all I've got for you guys. So let me scroll up into the VTF for questions. Scrolling back to like 10 after 4 or so in here. Looks like the first thing I'm seeing is from Holden. I find myself not being able to take a lot of trades called out in the morning because the risk versus yesterday's high or low is too much for my small account. So often I try to find a good spot on the 5 or 15 minute chart to enter. Great. So usually the entry will be based on the daily chart. When you're looking at a good spot for the 5 or 15 minute chart, that should be more about your stop loss. Let me finish with your question here. I think my intraday strategy lowers my probability of success. It does, but it increases your risk reward. Would you recommend taking fewer trades with the right risk intraday to increase probability of success, or is there as much of an opportunity on a smaller time frame? Yeah, sure. So, kind of what I was just alluding to, I was half answering your question as I read it. So I have I teased this, though I still got to get the T3 people to actually agree to it. I've always had like a watch list that I type it out. It's just like a Word document, and I should have done this a long time ago. I finally said to myself, what if I actually made this into like a more concrete list that could be something that we could send out to the traders who are on the team, or even potentially like people who want to subscribe to it or something like that. So, here I can even kind of just show it. So this is kind of what I've been doing each day. These are just obviously the dates on here, where I'm putting these ideas in, and then I want to potentially turn this into something that could get emailed out to everybody. But you can see here, for today, 113, what type of day is today, defensive, and then these are my trade ideas. Where I want to buy through, or sometimes it's where I want to buy versus, and the type of trade. Beyond Meat today, resistance break plus high short float, Delta resistance break plus earnings, and then obviously I go over usually most of these kind of in the morning meeting. So that's one of the things I'm thinking about doing, is I want to get these T3 Live folks to help me to be able to turn that into something that just looks a little prettier and better formatting and something like that. And then maybe everybody could actually get a copy of that at like 9 a.m. or so. It'd be great if I just don't know how to do it from a timing perspective, because sometimes the best ideas come from you guys and don't come from me. And I add to my list you'll see me typing maybe, based off some of your guys' ideas, or you guys see me put the alerts out in the morning meeting sometimes based off your guys' ideas. So this would be even better if I could have my favorite ideas that come from you guys into it as well, but then I got to think about the timing of it getting sent out, right? Because our morning meeting doesn't end until 9:29, and if it's getting sent out at 9:29, it doesn't help anybody. But if this is getting sent out at 9 o'clock, or even as late as like 9:10, 9:15, that could be really helpful. But Holden, why am I talking about all this? So most of these levels are daily chart levels. Like Beyond Meat long through 70, Delta long through 4150. That stuff is all daily levels that I'm looking at, and I still think that you want to enter on the daily levels. The question is the stop loss. What I can't do in a morning meeting is tell you what the right intraday stop loss should be, because the market hasn't opened yet, and I can't tell you, right? Because I don't know what the 5-minute chart's going to look like when the thing is actually triggering, or a 15-minute chart when the thing is actually triggering, because the market's not open yet, right? So it's obvious. So when I'm doing a morning meeting, I can really only talk about like daily chart stops as well. But what people who I think have been with me for a while know is that what I'm really trying to do is I'm trying to find intraday risk for daily chart reward. So sometimes I might use the daily chart stop loss, but most of the time, if I'm buying Beyond Meat or whatever, I'm not buying Beyond Meat at 70 and giving it to this last pivot low on the daily chart at 63.76. I'm trying to buy Beyond Meat, and I know this maybe isn't the best example because I was just talking about in my portion of the morning meeting how this was too much risk, but I'm trying to buy Beyond Meat and have an appropriate stop loss. So yeah, the spreadsheet here says Beyond Meat long through 70, but then when the market's actually open, I'm like, okay, I can cheat on this thing. It looks right. I'm trying to sneak in this thing at 69.25 with a stop loss at 68.66, 68.65, the low of this bar, expecting this is going to become an ignition bar. And even that's 60 cents risk. So it might not be right for you. Beyond Meat can be a little bit of a crazy name and was moving with a big range. But other times, this was not on my spreadsheet for today, but like I traded that Labu. Labu was a 12-cent risk trade. 15-cent risk trade maybe. Long off $25. You could have even adjusted your stop. I don't like this that much. You could have adjusted your stop to the intraday low. You could have bought this thing for 15 cents risk. I think I had like 18 cents risk on this thing, and then that becomes really appropriate, but it's still based on the daily chart. It's still based off of this pivot point, this $25 support in a really beaten up ETF that I'm trading versus, right? So what you got to learn to be able to do, and this is where it becomes really difficult for me just because the market's not open yet, is you want to combine that information that we're providing in the morning meeting. You still want to trade as much as possible versus daily levels like 25 and Labu, or through daily levels like 70 or 4150 breakout levels in Beyond Meat and Delta. You still want to trade versus that, but on the intraday, right? Not necessarily just buying Labu the second the thing opened at, $28 and giving it down to 25, or buying Delta or buying that Beyond Meat and giving it all the way down to like a daily, or like UAL, right? UAL was the inside day. Technically, if you're trading a daily chart, you want to give UAL as your stop loss to yesterday's low. I'm not doing that. There's no way I'm doing that. 4750 is what I want my entry to be, but then I need to find an intraday stop loss to potentially make the risk more appropriate. And again, a lot of what I focus on are names in play, and the problem with names in play is that, similar with Beyond Meat, look at the opening range on this thing. This is why I didn't really pull the trigger on it for myself. Was it's triggering through 4750, stop loss has got to be 4688. So even on a 5-minute chart on a $47 stock here, you're looking at 60 cents risk. But it's not always going to be that way. And if it's not appropriate for you, then don't take the trade. I didn't buy Beyond through 70 today because the risk wasn't appropriate. I didn't even buy this UAL, even though it's on my list, through 4750 because the risk's not appropriate for how I trade. I want to find that tighter intraday stop loss. Now, what does that tighter intraday stop loss mean? It does mean that you have a lower probability of success. You're right. You're going to have a higher probability of success if you're buying, UAL through 4750 and you're using a stop loss of 4627. You're going to have a higher probability of success doing that. But the flip side is you're going to have so much of a worse risk reward. So this is where, this is one of the difficult things about trading, is that there's a balancing act going on between risk reward and probability of success. For the most part, not always, every once in a while you can find that amazing setup that has this amazing probability of success based on the stop loss and kind of amazing risk reward also based on entry point and stop loss. Pretty few and far between. Most of the time you're trying to do this juggling act between, I want to find an appropriate stop loss where I kind of know that my idea is failing, ideally on that smaller time frame, because if I can have smaller time frame risk and large time frame reward, I'm going to inherently have excellent risk reward ratios. I'm trying to balance that and still have the good probability of success, if that kind of makes sense. But I can't tell you pre-market that the Beyond Meat risk is what it's going to be exactly, or the Delta risk, or that Labu risk. I try my best, and it's hard to do it in real time as these things are happening. But this is also where you want to learn kind of my approach. If you're trying to trade my approach, you want to learn my approach, and the way that you learn my approach is by going through my training program classes. Not sure if you have access to those or not. But if you go through my training program classes, which are free for professional traders at T3 or for purchase through T3 Live, then you'll be able to learn through the classes on your own without me having to say it where that stop loss probably should be on Beyond Meat or Delta. So I hope that helps, Holden. Great question. Love those questions, guys. It's a probably a more beginner-ish question, but that's great stuff for all of us to review as a team. So appreciate it. Yeah, Steve from Denver has. I mean, we did get a good little 2-day bounce there, but there's been nothing after that. From Terry Jones, PCG, Pacific Gas. Whew, man. I gotta take a look at this chart. Where was it that this thing... Is this split? Oh, no, it was back here. I remember Pat and I caught this trade. I think it was this halt in here. I just gotta look. I haven't looked at this chart in a long time. Yeah, this was an intraday halt here, I think. Pat got the news in the VTF like super early, and we bought like $8, and then it immediately halted. So like I would have been selling on the way up and like couldn't, and then it like opened up at like 12, and we just had like the sickest trade ever of Pat getting the information in the VTF super fast on this. I don't even remember specifically what that news was. This was when they were toying with bankruptcy because all the fires that they started due to their negligence in California. But anyway, overall, the chart's looking great. You know, utility company, so it's a flight to safety trade. We know safety trades have definitely been, you know, really strong. It's been where a lot of the money is, and the thing looks great. I would have liked to be involved in it yesterday. You could have still taken it through like 1250, 1260 today. Thing looks fantastic. If you're in it, just keep it, trim it, trail it. If you're not in it, I think you missed your entries. But it's nice. It's the going rate for a pint of blood. Next here is from Sebastian. Hey, Derrick, I was looking at UAL today above 47.50. See, Sebastian here, man, is awesome. You know, he did the open house thing that we did, and he's unable at this time anyway to actually become a professional trader at T3 Trading Group, and I'm hoping that changes at some point. But Sebastian's a great example of someone who, you know, dedicated the time to really kind of learn the approach, and he isn't even able to be in the VTF right now all day, yet has learned it well enough that he's got the same, all the time he's asking me questions in the afternoon meeting through YouTube about stuff that was exactly the same stuff that was on my radar. So that's what I'm talking about, how you can, you know, you can learn the approach and then everything else can feed off of that a little bit. But learning the approach itself will be able to help you with a lot of the stops and doing the right things. So anyway, looking at UAL today above 47.50, I wanted to ask you about execution. I bought it 47.61 and sold in the way up. All right. I don't know why you bought 47.61 and not 47.50, but okay. I had 30% still, and at 10.40 when it broke the inside candle, at 10.40, when it broke the inside candle to the upside, about to tell me that you added? I added. I had to back a lot of my initial position. So I like that specifically if you're adding back points of your initial position that you sold at higher prices. I don't really like it as much if you're adding back stock because of this on stock that you sold at lower prices. But anyway, because we don't want to turn winners into losers, right? Back a lot of my initial position and moved my stop loss to 48.17. Okay. I kept selling and got stopped out of the last percentage at 48.59 at 12.45. Okay, I see it. This is awesome technicals you got here. Would be great if you can give me some thoughts and also tell me what would have been your initial stop loss. Yeah, so that was the problem I was saying earlier when I was reviewing this. Initial stop loss I really think has got to be the low of the ignition bar here, which was 60 cents risk, so I thought it was a little bit too much. And your execution is a little bit late, so for you it's even like 72 cents risk. It's even a little bit more if you're using that as your stop loss. Already just gave you my feedback on the ad. You know, your stop is your trailing stop is tight. Just want you to be aware of that. Midday here, I know the market didn't do you any favors, but midday here, that's if you're trailing on a 5-minute chart, you're very typically getting stopped out of your trail midday. I would love to see you be trailing some on that 5-minute chart that you want to just make sure you really lock the profit in on, and also trail some on a little bit of a larger time frame, a 15-minute chart or an hourly chart, which in this case would have meant that you would have not made as much money as otherwise, but you would have put yourself in the position to make even more. Because this stop loss on a 5-minute, it easily could have been this pullback here midday at 12.50 stops you out. This is still a higher low compared to like here, and then you know get your next level of continuation. So I'd love to see you getting stopped out of some where you got stopped out, some you're giving it more room, which means you're getting stopped out into the close and making not as much money. But again, the point is that you're putting yourself in the position to make more. But overall, man, awesome job. You're doing great. Really hope to get you on the team at some point. From Jonathan, I had Microsoft short on my list today. Look at this guy, shorting my favorite company. Hey, it went down right. And look at the doji for the lower high for Microsoft, and this thing we knew was weak. It broke this, like 317 support down here when the Nasdaq hadn't been able to do that. But anyway, I took an inside 5-minute short through 318.69, just above the prior 5-minute bar as my out. If you can give me times when you give these types of questions, it always makes it easier. 318.69. See if I can find it on here. Shorted through 318. Maybe it was this inside bar. Yeah, 318.69. There we go. I took the 5-minute short through the inside bar here. I find this to be a very hard trade. I know it worked really well, or maybe it didn't. Maybe it got pushed out on this, whatever this tail is. It stopped out during a HF, I don't know if you mean hedge fund or high frequency, scam wick. Just be careful with the language. I know what you mean, but we want to choose to blame our stops on ourselves and choose to blame our successes on not ourselves. It's just a better habit, even if you're right. It's just a better habit, because eventually this could lead to you blaming things that are your fault onto the market or something else. And immediately went back down. I stayed away, did not re-enter, as I did not have a 5-minute inside entry. What do you think when this happens? Do you re-enter, or did I have the right line of thinking, staying away? Obviously upset as it continued straight down all day. Yeah, so what you're describing here, I know that in recent afternoon meetings, or at least somewhat recently, I've described to you guys my biggest weakness as a trader, which was always my ability to control my emotions. What happened to you in this situation, this me 10 years ago, whatever, when I was a younger guy, this is the type of stuff that would make me blow my top. And I could be up P&L on the day, down P&L on the day. Like, if I got stopped out on a through print or got stopped out on, like, some crazy little uptick on, this tail or whatever, and I can't get my stock back, and I just would lose my mind. I would lose my mind, and then I wouldn't be able to help but stare at it and like chew my hand off all day as the trade works without me. So that'd be the first thing I would say to you. You're not alone in your frustrations, but we want to learn to be able to control that and not let it affect our trading. And I do stand by, as someone who is now a little older and more mature, I do stand by what I just said about not ever blaming the market for getting stopped out of something. You're going to be better off in the long run if you choose to blame yourself. Or just choose to say, not even necessarily blame yourself. That's the wrong phrase. I shouldn't have said it that way. If you choose to just accept, I guess is really the right thing to say, which I know sounds a little bit more philosophical, and that's because it is. We have to have acceptance on our trading. You chose to take on this risk. You cannot control what the market is going to do. The market pushed you out with whatever weird circumstance it is. You accept it. You accepted the risk. It is what it is. You have to follow your strategy that's going to create consistent profitability in the long run. That's what you have to do. And I know it's very hard, but we all need to work towards that. The other thing I would say to you is I don't love your entry execution. I know you have the inside 5 here. It sounds like you had a bearish thesis in the stock, which I understand. It's been a bit relatively weak. You have the potential daily pivot, from yesterday. I don't like an inside 5 short into a gap fill and into the moving averages like this. I don't think that this is going to be a high probability trade that's going to give you follow through like this with consistency. I think that you need to be looking at Microsoft to the short side really only after Microsoft was below yesterday's low and or the Qs were below their low from yesterday as well. And eyeballing this, I'm not seeing any real easy setups. I do remember, and I didn't say it out loud, I do remember seeing Rock in the VTF mention Microsoft's weakness at like noon today and typing it up and noticing what's called an H pattern here on the 5-minute chart. So one great short trade that people could have taken was Microsoft short through 312 on what's called an H pattern. It's an H pattern. It's a bearish downtrend pattern that basically looks like the lowercase h. You would short through the previous low for continuation. Technically, the proper out is the high of the H. So that's a downtrend continuation pattern. I like that so much better, even if it's worse or pricing, even if it's, $7 late or whatever compared to where you're actually getting involved. I don't like your entry execution. Outside of that, though, I know it's frustrating. You had a thesis. You have a legitimate execution. You got pushed out of it. You were not able to re-enter. There was no new setup for quite some time in this thing. Honestly, almost until what I'm talking about here. It just is what it is. We've got to kind of accept it. I've been there. I've been there so many times. Yeah, Steve, I'm going to work on it. Yeah, I don't even know how to, let me just try to see if I can even do that. I'm so bad at tech. Oh no, I already messed up my whole watch list now. What if I did it like this? Copy. Let's see if this works. Yeah, it's okay. I want to just try to do this right, Mike, and get it done officially through T3. And then if I can't, then I will figure out a backup plan. Yeah, I see you guys all giving that basically the same feedback. Like I said, let me try to do it more officially through T3 first. It's just something that I brought up to them like a week ago. And then depending on how that goes, I'll figure out a backup plan. If your game plan is buying versus support level, do you only choose one support level which you are interested to buy versus, or do you have more levels which you might be of interest? Definitely depends on the trade, Robert. Both. A lot of times it's just one level. Sometimes it's multiple. Don't have a straight answer for you on that one because it really depends on the setup. And I know we've spoken in the VTF recently because Felipe does it a lot where he'll be trading with multiple stop losses, multiple areas that he's trading versus. Sometimes what Felipe does, and sometimes I do this as well, is I will take a lot of stock versus a tighter stop, and I'll take a lesser stock versus a looser stop. And almost trade them as if they're two separate trades. So sometimes what I might do is take that lot of stock versus that 5-minute stop loss, and maybe a little bit of stock versus more like a daily stop loss that requires a lot more space. Cool trade 117. We'll work on it. I will work on it. Discovery from Jerry asking me a technical question on a ignition bar. So technically an ignition bar is not what you're looking at if you're seeing a stock break an inside bar. Technically an ignition candle is very specific to a resistance or support break. So based on the daily chart here, I would not consider the bar that breaks above yesterday's high as an ignition bar. So I'd be hesitant to use that bar low as an out unless for some reason it was on significant volume. So basically the break of the inside candle here is this. And you know what? The volume on this is decent. So on this one I might use that low. I prefer, if it's the break of an inside candle, to use... I guess I did do that with Delta today and UAL today, but they were also trading on news. So I prefer, when possible, on inside bar breaks or inside day breaks, to use a pivot and not the candle in which it's breaking necessarily, again, unless there's high volume on it. So like Disca here does have high enough volume, and it is also kind of a pivot at the same time where you could have used this low. Otherwise, the only other thing is the low of the day, which is going to be too much. Yeah, Rich's comments here on a good mentality for trading are right on. Jack Dorsey's Square building open Bitcoin mining system. I'm Steven on Micron. I had Micron on my list yesterday. Did not have Micron on my list today. But I do remember saying intraday, even though it wasn't on my list. Yeah, this 96 is important, this 96 area. And off the open, I thought that this Micron looked fantastic because the daily chart looks great. It was trading as a secondary to Taiwan Semiconductors, which had excellent earnings and was up huge. And this thing was trying to be really strong. So I remember intraday here, one of you guys bringing it up and me typing it up and being like, oh man, this Micron looks great here off the open. Eventually no follow through, but look what the market did. Excuse me. Oh boy. At 12.25, I really don't like the midday trade. I really don't like these midday trades. You bought it at 12.25, risked 40 cents versus the previous candle's hammer, and you were not able to get your 1-to-1. Yeah, you do have a volume pickup, you do have a hammer, you do have a relatively strong stock, you do have an inside and up. There are things to like here. You do have a legitimate trade. What you don't have is enough extension. It looks like, when you're, if you want to re-review my candlestick class, your entry point. Well, what did you enter at? 96.80. Your entry's actually pretty good. Yeah, so your entry actually might be giving you enough here where it's okay. But generally, I want to see the space where I'm buying versus the low to be at least 1-to-1 with the space where I'm buying to the ADMA in order to take this type of trade. I want to have the volume, which you do have. I don't like the time of day, and I don't like the positioning broader on the chart, which I personally would not take that trade because of those factors. But I do see other things that are likable about it, which is what I just described. So it is a trade, and you didn't get your 1-to-1, which is unfortunate. But again, there's some tough things about this trade. Really, it's just a really tough time of the day. This thing just had the flip side of it is it just had an intraday breakout failure. I know it didn't give 100% retracement yet. It's not like it broke lows in the day, but this thing just had an intraday breakout failure. You're dealing with a weak market environment. What did the market look like by noon? Yeah, you're fighting the market also. There's just a lot of things I don't like about this trade, and there are enough things here that do make it a legitimate trade. So you do have a legitimate trade here. Whether it's a good trade, that's a struggle for me on that one, for the reasons I outlined. Mr. Trees, I don't see your classes. I don't know where you're looking, Mr. Trees, because I know you're on YouTube. But if you reach out to the folks at T3 Live, actually, I'm curious enough to know where you're looking that if you could email me, I would appreciate it. My email is my first initial last name at t3trading.com. Oldensmith at t3trading.com. If you can email me where you're looking, I'm really curious because I'm discussing a lot of things with T3 Live now, and I need to get them to do some things for me. And if you're telling me that there's no ease of access to my classes, like there should be the same ease of access to be able to get my training program classes as there is anything that Scott or Sammy produces. And if there's not, I gotta make sure that that's possible. So again, I'd appreciate if you would email me where you're looking, and it's Oldensmith at t3trading.com. And then also, for sure, if you're interested in exploring it, you can email info@t3live.com. But email me first, please. No problem, Sebastian. From Sean asking about we. 2 positive baby trades in Wii today between 10:30 and 11. Yeah, the thing about this Wii, it's been relatively strong. It, helped my performance on the day today as well. It just keeps grinding up. I just really wish something real would happen here. Some volume, some analysts to view it. It's going to be very hard for this thing to break this $10 the way it's continuing to grind. I think that the closer it gets to 10, the more difficult your intraday trades are going to get unless something triggers it, something actually happens. But it's holding above 950, which was that last resistance level, decently well. It has been providing some relative strength. So For that, it's worth watching. But I think that the intraday trades in this grind here over the last several days have been difficult. So I'm glad, if you found a couple baby trades in it and you were able to make a couple bucks just because of the relative strength, then I like it. How do you ID reversals to max reversal profit? I had two pots, so let me actually read your question a little bit more granularly. So between 9:30 and 11, 967 entry. Between what? Oh, 10:30 and 11. 967 entry, so it's on the way up here. I gotta be honest, I don't love it. I can't get excited about this candle at this time of the day. But below the moving averages, when it's got no volume going on it. This bounced here because the name has been relatively strong. It easily could have given downside follow through. I'm glad it worked. We had identified that there was a seller at 975 last couple of days, so good spot to book some profit. Second was 115 to 220. Yeah, same. I don't love the execution. 200 simple on the 5. I know I keep this yellow line here. My brain doesn't register this yellow line. I just want you guys to know that. I've got this yellow line here because I want to see it on my daily chart. And when I switch from a daily chart to a 5-minute chart, it's still there. My brain doesn't even register the 200 simple moving average 5-minute chart line as anything. So how do you ID reversals to max reversal profit? I'm not sure I even understand the last part of your question. How to ID reversals to max reversal profit. It almost seems to me like what you're trying to ask, you're trying to identify, is how to perfectly see every pivot high and every pivot low that's going to come into the market, right? Like the ideal trader in a perfect world would be able to buy every pivot low on any time frame chart, sell every pivot high, rebuy that pivot low, sell the pivot high, not rebuy the pivot low when it's going to reverse, or maybe do it but get stopped out. I don't know anyone who's good enough. And I get so annoyed when I see like people who are trying to sell like a product or something, like show this perfect chart that they found in hindsight where it just like holds the 20 simple moving average over and over and over and over again, and you should say like, oh, you just buy off the 20 simple moving average. That's a great trading strategy to make $1 billion. Please, if trading was that easy, right? You just use magic moving averages that always hold. I have never met anyone that's good enough to be able to sell every high and buy every low. I am not anywhere near good enough to be able to do that. That's why we trail. Like, you would never implement trailing stops if you were good enough to sell the highs and buy the lows consistently on every single pullback that comes in an uptrend pattern. You wouldn't need to trail because you'd be getting out and perfectly rebuying when the low comes in. It's not possible, I don't think. So that's why we implement trailing stops. When you have that position with you, don't try to pinpoint the exact spot at a high where it should reverse back down. Sometimes it's obvious. Sometimes there's an obvious signal like a high volume extension shooting star that says to you, hey, I should book a little profit here. But to try to identify like every one that's going to happen, it's just not going to happen. So, you got to be consistently kind of trailing there. So I hope that helps. Yeah, Stephen, to go back to your question, Stephen T here, I get it. I think I went over this. So what the feedback he's saying is I'm a slower trader and it's hard to get trades off early. I get it. I mentioned this also in an afternoon meeting recently because I've seen enough statistics from enough traders. Most experienced traders, and I would definitely be in this category, their most profitable time of the day is to trade really the first half hour. Most traders who are newer do not perform well in the first half hour because they're not fast enough and the market's too thin. The exact same reasons why the experienced trader is able to really capitalize very well in the first 30 minutes are the exact same reasons why the newer trader struggles in the first 30 minutes. Because it's fast, because it's less liquid, because there's price discovery that's occurring, and it's just moving so quickly. So newer traders, I've seen enough statistics to know, tend to have like their best time of the day between 10 and 11. So, for you, if you're newer and you're slower, you should still have a goal of getting good enough to be able to really, take those opening drive trades. But if you're still working towards that, you still want to be careful about 12:30. 10 a.m. to 11 a.m. might be more of a good sweet spot for you. You still have better probability of success at that time of the day as well. From Steven here, Microsoft had a big flush on the daily to a pivot support level on the daily. Would it be a great trade to go long tomorrow? So I love Microsoft as a company. This chart looks terrible. It really does. I want to say yes, but the only way I can say yes is if I'm looking at Microsoft in a vacuum. I would want to say a gap down on Microsoft tomorrow could be very viable, and it could be. The problem with Microsoft is the relative weakness. Find me the charts that broke Monday's low, and I'll tell you the charts I don't want to buy tomorrow, because the only thing that's breaking Monday's low are things that are relatively weak. Is the Nasdaq breaking Monday's low? It's not even close, but Microsoft sure is. So I can't justify purchasing something that's that relatively weak, that's already able to break Monday's low when the market itself is so far away from it. Again, looking at Microsoft purely in a vacuum, yeah, it's extended, it's beaten up, maybe I can try it, but this is not what I want to go to tomorrow, I don't think. Maybe the day after tomorrow. If we get another really weak day tomorrow, if Microsoft goes down 10 points tomorrow, and then we can gap down the day after that, yeah, sign me up. Sign me up. I'll be very interested. Then basically, we'd be looking at another weekday tomorrow, and then Microsoft gapping down to the 200 day the day after that. Even if it's relatively weak to the Nasdaq, that degree of extension into the 200 day on the third day down, and it's a gap down, yeah, okay, let's do it. Tomorrow, I think we've got to be a little bit cautious. But let's assess that in the morning when we have more information, and we can, kind of see what some of the indicators look like, and we can assess the gap as well. No problem, Sean. All right, gang, that's it for today. 10 after 5. Tough, right? Crazy, this market. Crazy, these movements. Crazy how hard we broke down, particularly with the Nasdaq. But we recognize all this stuff, right? Day type today, be defensive. Some of these trades that we're focusing on were almost all names that were in play. Some of them worked really well. Definitely tough overall. But, again, as a team, I don't think we could be navigating this price action better. So have a great night, everybody. I'll see you tomorrow.